This stock will surprise everyone. This is not financial advice, but my research suggests people who buy $50 of this before November 15th could do well. The stock is Solar Edge, SEDG is the ticker. They recently had Q3 earnings, $340 million of revenue, beat consensus. Just over 100 million of that coming from European revenues. So that's up almost 50% quarter over quarter. Very fast overseas growth, which is encouraging if, for some reason, solar doesn't end up being the energy source of choice to power all the data center build out. There is major growth in Europe as well. So a little bit of diversification for this company in case there's diversification among energy sources. Again, this is not financial advice, but let's jump into a breakdown on Solar Edge.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So first off, this is the chart. And so this is unusual to talk about a stock where the earnings is so good, but it just brings it up to a level that already existed. So it had been selling off before earnings. So that's kind of indicative of the earnings being a surprise, right? Sometimes you see good earnings being prefaced by buying. Look at the buying into Apple's earnings, which were solid. Amazon, same situation. So it's a little unusual to see a move like this, and it's holding up. So this actually is being received well. Now it's gone on quite a run, but it's only a under $50 stock, so it's reasonable to see it almost triple during a period of about 6 months when we're talking about an under $50 stock. So here's the earnings. There's the earnings per share. Loss was less than expected. And let's jump into a little bit about the earnings so we can dot our T's here, cross our I's. There's the revenue exceeded analyst estimates, almost 20% increase from the previous quarter. Gross margin improved from the previous quarter. Net loss improved from the previous quarter significantly. So this is a little company, right? It's a startup that's publicly traded. And with these companies, you do want to make sure that they have some institutional ownership, particularly in biotechs. It doesn't matter as much with companies outside of biotech, but if it's a high institutional ownership, that can be, a good sign. It's not a bad sign. I'll say that for sure. And we don't have to worry about dilution too much. So that's good. The market cap may be the reason for that. I'm not 100%. I think this tool does carry, especially if a small market cap runs up quickly, it'll carry information about a dilution. The market cap alone being like 2 billion isn't in and of itself reason for dilution not to exist or not to matter. There are certain cases, like some of these quantum tickers have raised, this is a $10 billion market cap, and they've raised like $1 billion. I mean, maybe not RGTI. I mean, 350 million is a lot. And then in one raise, and then IONQ, there's $1 billion, right? So dilution definitely can matter. I mean, to raise $1 billion, you have to do it. You can't just sell shares into the market to do that. At least, I mean, maybe you can, but it would really depress your stock price, I would think. Like they can only raise $500,000 with their, and this is from 2 full years ago, so they'd be unlikely to use this in a short period of time of a few days. So all this to say, it's useful to know that Sedge is not super hinging on a dilution in order to raise money. They are, having a loss, but it's improving, and revenue is improving. That European revenue is improving right here. And this is a notable award. I'm not going to explain to you what the inverter market is because I don't know what that is, but I have heard of it. I think they are definitely in the conversation with the biggest solar companies in the world. And these are the solar companies right now we're talking about. Enphase, so that's, I guess, their main competitor. First Solar, and then the Canadian one, as well as I guess Sunrun as well. I don't hear Array talked about as much, but again, not in the industry. So what I look at is I look at how the charts are shaping up. And First Solar looks great. It just seems a little bit hard to get into right now. Maybe after this sell-off, there is a place to get into it, but I more so just mean in general, it tends to channel. So for that reason, Sedge a little more attractive. Enphase, right? Just yucky. And Sunrun, this earnings reaction is pretty ugly. We can see exactly day by day how that went down, but down in after hours and then continuation sell. Like a mini meta, right? And for completeness sake, here's CSIQ. Crazy run, but earnings coming up. Can't really touch this right now after like 7 green days in a row. Can't catch them all. I did not see that coming. Although, yes, of course, in hindsight, everything looks great. And then Array is the other one to take a look at, see how this earnings reaction holds up. So that'll help make sure, give you confidence to hold Sedge. So this is the line right here. It's literally at that line, and that's the idea, SCDG. If you like these ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe. I post that in the YouTube posts. And if you want to get one-on-one help, head over to stockscommunity.com. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.